And just should have started a second ago, but that's okay. I wanted everyone to wish Linda a happy birthday. Linda's a past president and governor.
Thank you.
Thank you for everything you do for us in Rotary. I have a couple of things I wanted to bring up. We supposed to have a club social in October, and we've never decided where we want to meet or when we want. We decided we're going to meet the week of the Halloween thing with the boys club, but we didn't decide where we wanted to go. So I was going to ask if anyone wanted to suggest some place tonight. Linda said Spring Creek. That was one of the suggestions. Does anyone else have another suggestion, or they want to do Spring Creek? And if so, where do you want to do it in Spring Creek?
Well, maybe we could have a costume party at Lisa's.
Yes?
She said yes.
She said yes. Okay, let me go to my calendar, and I'll check it. Let's see, October. I think we're looking like at October 30th. Is that the?
No, it's October 27th, I think, or something like that.
I think the Boys and Girls Club is the 26th. So is it the week of the 23rd then?
Yeah, no, it's that weekend, that following day.
Well, I thought we would have it on our regular meeting time instead.
I'm not going to be in town.
On the 20th.
We'll be there the week after.
What about the 30th?
The 30th will be in town.
Okay, let me just make sure I don't have a speaker scheduled for the 30th. Let me just go check. Let's see. Give me a second. I don't think I do. Okay, I can block out the 30th. So let me make a note for myself for today after the meeting to block it out. Block out October 30th for Lisa Halloween party. Okay, I got that down. Perfect. So is that okay? Oh, we got to vote on it. I guess that's the right way to do it. Is there any, you want to make a motion that we have the party at Lisa's on? I don't think I'm supposed to make the motions.
No. I move that we have the Halloween party at Lisa's.
Second.
Wonder what Lisa thinks about
Lisa said okay.
Okay. Is that, all in favor, raise your hands. Okay, I'm going to, Rick, is your hand is up? No? No?
No, I'd rather have it maybe somewhere where we don't impose on Lisa again, but maybe at a pizza place or something, you know.
Okay. Do you want to discuss it? Is there any? How does anyone else feel? I'm flexible. I'll do whatever works.
We can have it at Rick's.
Well, I was really just thinking if I'm not sure I want to do a costume.
Okay.
But if we just have a social somewhere.
Why don't we hold it for discussion? And you could put it out into the letter that you send out and see any suggestions.
Okay, I'll do that. That'll work. Okay, let's do that, and then give some thought if there's some place you'd prefer. I'll do whatever. It's really not critical to me one way or the other. Whatever works is fine with me. So.
Okay, Lisa says she and Larkin will have their costumes ready.
Okay. So give some thought. I'll put it in the next letter, and if you have any ideas what you want to do, Rick, then we could throw it out and we can all vote on it and see if whatever works. I'm okay with it. Okay, is that okay with everyone then?
That's fine.
Okay. I was gonna let you know I'm doing something. I wanted to use it as a Rotary gesture. I'm working with the Green Berets in Fayetteville. I was supposed to be there this weekend. Obviously, I wasn't in North Carolina, which is a good thing. I heard Fayetteville did very poorly. They had a lot of flooding. But I'm going back in October. I'm training the kids and then the soldiers. But the guy I'm working with asked me about doing something for the wounded warriors. And he said, would I be willing to speak to some of the wounded warrior groups? And he says, they got some here. And I was thinking about it. And I said, why don't I make my program available to all the wounded warriors online as something they could do as a gesture? And since I'm not getting paid for it, and it's a charitable act, I thought if I did it and I did it through the club rather than as me individually, then it would help the club in terms of, you said at the end of the year we have to show a report of what we've done for the community as a whole, and I thought that would help the club's standing in Rotary if we were to count that as a Rotary Act instead of a Howard Act. But I wanted to see how you felt about that. I mean, the club doesn't have to do anything. I'm doing it anyway. I just thought I would give the club credit for
I think
this.
it's very great.
Is there anyone, should we make a motion that the club, that I can do this on behalf of the club? Does anyone want to make that motion?
I really don't think you need to do that.
I'm not
Anything you
sure.
do-
I don't want to do something on behalf of the club on my own without the approval of the members, because if it's on behalf of the club, it should be on behalf of the members, and I think the right way to do that is to tell the members and ask them if they're okay with that.
I move that we do it as a club project.
Second?
I second.
Okay, then, and we'll vote. Raise your hand if that, oh, good. Lisa, you're a no? I don't
She
see your hand.
I think it's,
I don't think she hears us. Does she hear us?
well, she doesn't have a lot of sound, I think. This
Okay,
is-
okay, well, I'm gonna assume that it's okay. We got, okay, perfect. Thank you,
Or
Lisa.
you can have up to 100 different users logged on with our account.
Oh. Okay, well, that was basically the business. Is there anything else that, I know Lyndon knows a lot about school. Is there
One
anything
other thing, September the 30th is the Interact Summit. And so we'd like to have somebody there. And also at the October meeting is the training for the grant certification.
We'll be out of town.
And we'll be out of town. So if somebody can go on that Saturday, the second Saturday.
Okay, when is the Interact? It's on
It's on Saturday, September 30th.
okay, that's a Sunday.
No, it's on it's the last Saturday in September.
That's the 29th.
Okay.
Interact.
And go to the district website for more details.
Let me see, Interact meeting. Let me see if I can do that. If I could do it, I'll try to do that. I'm
Okay.
putting it on my calendar, and I'll look for the information. Okay, so I'm not promising, but if I can do it, I will.
Okay.
Okay, I don't know about the other thing. What was the other thing?
Interact, and then the grant certification.
We don't really get grants, so it doesn't.
Well, we are this year.
We are?
Because of the RILA. We've partnered with the other.
When is the grant thing? What day is that?
That's the second Saturday of October.
Let me see when that is. That's
We're already certified for this year.
the
But for next
13th?
year,
The 13th?
right, whatever the second Saturday is.
I'll write it in. If I can make it, I will. If you could get me the information where you have to go and sign up.
Okay.
Okay, I'm putting it down. If I guess that's part of being president, supposed to sometimes do stuff.
Okay, I move that we go ahead and get the speaker going.
Okay, that's it. Yeah, there was everything. We don't usually have that much stuff. Okay, Mike, we're ready
Yes.
for you. Mike is a great speaker. He's going to talk about business and acquisitions and buying and selling a company. I think that was what you said you were going to speak about.
I did say that. I'm happy to give you my background and what I do. And I have a presentation prepared.
You could show it on the screen. I'm going to mute my microphone, and I recommend everyone else does while he's speaking so he doesn't get any noise and
And start
distraction.
recording,
He's already started.
okay? It doesn't show.
Pardon me?
Oh, I said I'm going to mute my microphone while you speak so you won't get any noise. I'll come back. I'll be here, but I mute my mic.
Okay. So you want me to just go?
Go. You're on.
Well, thank you all for having me. I very much appreciate it. I'm in the process, hopefully, of pulling up a presentation. Do you have are you able to see something on the screen? I guess. I'm waiting for you.
Yes,
Okay.
we can see it.
All right. Whoa, my computer just did something a little wacky. Okay, I think I got it. All right. So thank you all for having me. I very much appreciate it. Who am I? My name is Mike McGill. I am a co-founder and managing director of an investment bank called MHT Partners. I've been doing investment banking, which is a fancy way of saying I help owners of businesses buy and sell companies. I've been doing that. It says here for 25 years plus. It's been 28 years. My individual focus or personal focus is on tech and tech-enabled services companies. So that's where I spend my time and what my context is. I've spent. I was pleased to celebrate my 25th anniversary this summer. I've got 3 young adult daughters. And when I'm not working, you can find me on a mountain bike or skis or anything that's kind of outdoor enthusiast sorts of activities. So that's who I am. And by the way, I appreciate that you did mute, but to the extent that you do have questions, I think it might make for a more interesting presentation. So feel free to ask them as we go if that's your protocol. Just to give you a little more context about where I'm coming from, this firm that I and a couple other people started. We started 17 years ago. Our focus is on what I would describe as being high growth, niche market leading innovators. We have 3 offices, Boston, San Francisco, and Dallas. And we focus on 4 verticals. So as at reference, technology focus, I run our business and information services vertical. We do spend a lot of time working with companies who provide services and technology into the education vertical. There are certain areas within consumer where we spend our time, and those would be growth pockets within consumer. So think functional food and beverage, as well as outdoor enthusiast products. And then healthcare services is another area where we spend a lot of our time. So we work with a lot of large physician groups as they think about how they might monetize or sell, large dermatology practices or orthopedic groups or groups that manage emergency departments within a hospital setting. Okay, so in terms of who is involved in the successful outcome of a sale of a business, I'll address the who's involved. The what, we're talking about, what makes for interesting businesses and makes for businesses that, buyers tend to have a desire to own. I can address a little bit about market conditions for owners of businesses who are thinking about selling. And then, how are these processes typically conducted and what are the resources that are typically deployed in connection with the sale of a business? Okay, so from a buyer perspective, there is a gigantic universe of prospective buyers. And if you are an owner of a business or on the management team of a business who is thinking about selling, one of the terms that you will hear is strategic buyer. And what is a strategic buyer? Generally an operating business that has a, quote, strategic reason to buy one or more businesses, and a typical series of reasons for why a strategic buyer might desire to make acquisitions would be to increase market share and or expand a geographic footprint. Oftentimes you see it to eliminate competitors. We've all heard about antitrust and those sorts of things. Oftentimes a company will have some core competencies that could be leveraged in other end markets. And so, a company may buy a company who operates in other end markets, but could deploy, the buyer's technology or other competencies. Growth tends to drive value of businesses. And then the bottom two, I think, are pretty straightforward and obvious, either to offer complementary products to its customers or offer a collection of products or services to a complementary set of customers. Another term that you will hear, and there's a whole world of what's referred to as private equity or financial buyers. Those terms tend to be synonymous. These are partnerships typically who have been formed with the express purpose of buying one or more businesses. They hold businesses over a period of time with the express goal of ultimately selling them at a gain. And within this financial buyer community, here are some other terms that you might hear. Committed private equity funds are, as the name might suggest, these are funds who have a committed pool of capital to go out and make acquisitions. The investors into these private equity funds are typically pensions, endowments, hyper wealthy individuals who are looking to diversify their own personal net worths, et cetera. A relatively new class of investor and buyer of business is what's referred to as independent sponsors. These are generally people who have come out of private equity firms, go out and try and find companies they believe that they can add value to, and once they've identified companies, will go out and raise money to affect those transactions on a deal-by-deal basis. Search funds are a close cousin of independent sponsors. Search funds are typically 2 or 3 young professionals who've gone to work at big companies, who've come to the conclusion, they desire to try their hand at being entrepreneurs, and have the backing generally of wealthy individuals to go out and find a very specific company to buy. Usually, these search funders will then go in and run the business day to day, as opposed to a private equity firm who generally doesn't take a day-to-day role in a business, again, with the express purpose of growing a business to ultimately sell. And then family offices are the last ones here. These are generally families who've had a significant wealth creation event and who choose to invest the wealth that they created through the sale, typically of a family business, by investing into or making acquisitions of a series of smaller businesses. So why would someone sell, or what would be the reason as an owner for a business that you might want to sell? And we see all sorts of different reasons for owners of businesses desiring to sell. Today, generally millennials tend to have no interest in actually taking over, a family business. So oftentimes, we are working with family businesses that don't have a succession plan, and or desire to create liquidity. There are entrepreneurs who may have built a business, to a size and stage of the business where that entrepreneur says, I've taken it as far as I can take it. I really believe that I need to have a new owner who brings to the company a different set of skills, maybe additional capital. And as a result, maybe my employees would have more growth opportunities and more resources available to them if I were to sell my business to a bigger buyer. We don't work with companies, but there are certainly occasions where the companies are distressed and have no other choice but to sell the business. And so those are some of the reasons that you might find an owner of a business desiring to sell. So this next slide really addresses what does a buyer look for in a company in general, and what really drives the value of a business. And this list is a series of company attributes, which most buyers spend a lot of time studying as they're thinking about the value of a business. They generally start with an industry and market opportunity and, specific companies' market share within that industry? Is it a growing industry? Is it a shrinking industry? Are there interesting ways to bring novel technologies, into a sleepy industry, for example? All of those things would make for a more interesting company versus a less interesting company from a buyer's perspective. Company's historical performance, generally speaking, history is the best indicator of what you might expect in the future. So a lot of emphasis and time is placed on companies' historical performance. Most buyers place a significant value on growth and also on operating margins. And what I mean by visibility into future performance, most buyers, the lower the risk, the more, generally speaking, a buyer is willing to pay for a business. I think we probably are all now subscribers to one service or another. Generally speaking, businesses that have a subscription nature to them are viewed as being more valuable than businesses that have a project sort of orientation to them, primarily because you have a bunch of data and a business model that enables a buyer to take greater comfort in what to expect in the future. Culture is one thing that's often underlooked. I've seen many transactions where there was a highly compelling strategic rationale for one company to make an acquisition of another. They do it, and then all of a sudden you have incompatible cultures, and incompatible cultures are the number one reason why acquisitions fail. Generally speaking, buyers like to see a strong depth of management. They don't like to see cyclicality, which is the second point on the bottom, the second to last point on this bottom of the slide. And then from the standpoint of regulatory environment, to the extent that a company operates in a regulatory environment that's subject to significant and frequent change, that's usually difficult for a buyer to get comfortable with. On the other hand, if it's a stable regulatory environment that provides barriers to entry from competition, that could really be a good thing. But anyway, this isn't meant to be an exhaustive list of what drives value. I'm going to give you a sense for things that buyers focus on as they're thinking about value, and they're thinking about what makes for attractive businesses. So company attributes are important. What's happening in the market broadly also drives both volume of transactions as well as value with respect to transactions. I won't tick through every single one of these, but the markets for equity and debt tend to ebb and flow. We happen to be in a very strong market where most publicly traded companies are at or near all-time high values. That enables these public companies to make acquisitions by delivering more value to targets. A lot of transactions are driven by the availability of debt capital to be utilized to facilitate purchases. Kind of like, think about it, like buying a house. If someone could go out and borrow 95% of a house's value, that buyer might be willing to pay a higher price if relative to a situation where only 60% of that house's value, may be available in the form of debt, which would mean that buyer of that house has got to come up with a much bigger equity check in order to get that same transaction done. Same's true in terms of buying and selling companies. What I'm not going to do is bore you by trying to go through every one of the points on this slide, but the broader point is, if you look at the boxes on the right, what drives, delivering a fair value for a business. It's all of these points which I've covered in the light gray, that one might be able to conclude that you have a business that is growing nicely with an underlying efficient business model. If you can build on that particular premise and further establish with a buyer that any particular company that might be acquired is uniquely positioned to capture larger market opportunity, by either being a platform for future acquisitions or to disrupt industries with new products and solutions that will drive additional value in the business. And to the extent, the buyer has identified a particular company as being a priority on its roadmap, and if you take a look at a company and come to the conclusion that either you can drive additional revenue opportunity that doesn't exist for either company on a standalone basis, that tends to drive additional value. Also, if there happen to be duplicative or overlapping costs that can be eliminated in connection with a deal, yet another reason to justify a higher value. So another term that you hear, and as we're talking about value, most buyers will value a business on the basis of what's called enterprise value. And enterprise value is the value of the enterprise without regard to how it happens to be financed. So again, I'll use this home value analog. So enterprise value, if you've got $1 million home, but you owe a mortgage company $750,000, and that means the equity value in the house is $250,000. So when I'm talking about value in general, what I'm talking about is enterprise value. And there's the equity value and enterprise value are two different terms that you'll hear a lot in the deal community. How is value determined? Frequently, it's this is a formula that if you are an owner of a business, you're likely to hear, and that is EBITDA times a multiple of EBITDA equals enterprise value. What is EBITDA? EBITDA is your earnings before interest, taxes, depreciation, and amortization. Really what it is a proxy for a business's free cash flow. So, as most buyers of businesses think about valuing a business, what they will do is to say, what is the cash flow stream I'm buying, and how and effectively how many years worth of that cash flow stream am I willing to pay over to the seller? Now, there are a lot of games that ultimately get played with cash flow, and you'll see a bunch of different definitions of EBITDA. I won't run you through all of these, but suffice it to say that there is no accepted definition of EBITDA. My role as a seller's agent or broker or investment banker is to present the most compelling EBITDA or cash flow that I can present, and a buyer will look at this cash flow in the most conservative way that they can look at it, and we end up in an arm wrestle. It's much more of an art than it is a science. So that's the primary basis for EBITDA. From a valuation perspective, there are a bunch of different methodologies that are used. Think about this in the context of a house. There are, your neighborhood comparables. If you're selling a piece of commercial real estate, it's what is the cash flow of that piece of commercial real estate that comes in the form of net operating income. That would be the most analogous to this discounted cash flow. A leveraged buyout analysis is an analysis that we often do to say, okay, if you are one of those financial buyers that we had talked about previously, what is the maximum value you can pay for a business and still achieve financial returns that you had promised to your investors? And so, when we're valuing a business, generally we'll we will run all 5 of these analyses to ultimately come up with a value. I think oftentimes it's if you've ever had a home appraisal, you'll see a bunch of different approaches to an appraisal for a house. This is the operating company version of that same sort of work that a transaction professional would undertake. There are strengths and weaknesses associated with each one of these methodologies. In the interest of, raise your hand if you want for me to go through all this detail. I suspect the answer is no. But anyway, I'm happy to provide this presentation to anybody who wants to go into it in deeper detail. On this page 16 here, there is a prevailing view that as a business owner, you have two options, and that is either to keep your business or to sell 100% of your business. That's not actually true, as the what I'll call the private equity business, or alternative investment business, has grown and matured. What we found is that there really is a spectrum or a continuum of options that are available to an owner of a business to sell portions of the business, or to extract value out of a business without necessarily selling. So, at the top, what you have is extract cash flow. So if you're an owner of a business and it's generating $5 million worth of cash flow, one option is to do nothing and just to continue to collect that cash flow. Another option that most people are not aware exists is to do what's called a minority recapitalization. And this is where you can sell a minority equity stake in your business. There has been a more recent development that a lot of private equity firms or buyers have said, look, I want to invest in good businesses. I care a whole lot less about whether or not I ultimately have control or have a controlling economic interest in a business. I'm just out looking for good returns. So it used to be that there was a prevailing wisdom that you had to acquire control of a business to really control the destiny of the investment that you made. That's changed pretty significantly. Debt recapitalization is there are certain lenders for certain businesses who are willing to make loans to companies for those companies to pay dividends out to its owners without selling any of the equity. And then you always can sell a control position in your business, and then ultimately to get to a full exit is something that's been around and available for a long time. In terms of going about selling a business or executing any of those transactions, there are a bunch of different ways that you can go about doing it. And if you hire an investment bank to sell a business, they would ultimately advise you as to what the most effective approach would be. So to suffice it to say, I'm a fan generally of what I would refer to as being a targeted auction. And in essence, what a targeted auction for a business would be is you go out to anywhere, depending on the nature of the business, out to 20 to 100 of the most likely buyers. You're able to go communicate to each of those particular prospective buyers exactly why you think they ought to own the business, and can position it very effectively with that universe. It definitely enables creating the competitive and competition, which drives value. You can get the right parties more actively involved generally. And that's what, generally what an investment bank does, is to run targeted auctions. There is a community of what I'll refer to as being business brokers who tend to run broad auctions under the premise that, the more parties you've contacted, the higher the probability you're going to find, some crazy buyer that's going to pay you some crazy price for a business. We actually don't believe that is the case. And what is a typical process? If you do hire an investment bank to run a process, here's what the process typically looks like. It is generally a 5 to 6 month undertaking. The first 2 months are preparing to go to market. And this is where you put together, typically what you're putting together is a selling document, most commonly referred to as a confidential information memo. After preparing to go to market, you enter into the marketing phase, and this is where either you as a seller or your investment bank, representing you as a seller, would begin to make contacts with the buyer or investor universe. And that process generally takes a week or two. Once all of those materials have been delivered out to the prospective buyer universe, and by the way, before sharing any of those materials, at best practice is to make sure that every prospective buyer has signed a confidentiality agreement so that they can't do things like use company information to your competitive disadvantage if they're not the buyer, et cetera. And so once those sets of materials are out, typical process would then result in soliciting first round bids, and that's the preliminary term sheets or indications of interest that you'll see on this particular slide. And just to put it in context, if we contacted 100 parties to buy a business, we might expect that somewhere between 50 and 70 of those parties would sign confidentiality agreements and receive the confidential information memo. When we would go out and request the submission of indications of interest from that universe of 50 to 70 people who received the book, the confidential information memo, we might expect to receive 15 to 20 first round bids for the business. And with that universe of 15 to 20 first round bids, what we would normally do would be to say, hey, let's have the owners of the business and the management team meet with 5 to 8 of those parties. So, and that's what we refer to as being management meetings and the diligence process. So really what we're doing is starting with a broad funnel, and we continue to narrow the funnel down, all the while keeping it, highly competitive and hyper, on a regimented process, and with deadlines and to keep that that set of competitive juices flowing. After meeting with the management team, this group of 5 to 8 potential buyers, and having access to additional diligence materials, we would then solicit firm and final offers. And from that group of 5 to 8 parties, and let's say if we had 6 parties that we had go through that stage, we might receive letters of intent from anywhere from 3 to all 6 of those parties. And this is the point of maximum leverage for a seller. This is where you've got 3, 4, 5 interested parties. They've spent a lot of time and energy and money doing a bunch of due diligence on the company. They've submitted their proposals, and that's, you're able to go negotiate aggressively with these parties, ultimately to declare one party the prevailing, the winner of the auction process. And what happens at that point is a letter of intent gets signed, and then you enter into the period of time where you finalize a purchase agreement, which is usually a 50 or 60-page document which governs the transaction. Sometimes you need to do some regulatory filings, et cetera. And so the process from signing a letter of intent to closing is usually 30 to 60 days. In transactions, people always seem to focus on the price, and it's price. In this document that I just described for you, there are, I wish I could tell you I knew who this quote came from, but I really like it. It's in a negotiation, I would always be happy, with somebody who wanted to sell me something, to say, I'll pay you anything you want so long as I can name the terms. If somebody told me they wanted to sell me a pen for $100, I'd say, great, I'll buy that pen for you for $100, and I'm going to pay you a penny a month for however many months that might take. So, terms are important. And by the way, if the pen runs out of ink, you owe me $120 million. And I know I realize I'm making silly examples, but terms are always important, as important or more important than price when you're talking about selling a business or frankly anything. And that's all I have in terms of my prepared slides. I do have some slides that go into greater depth around forms of consideration in a transaction, but I figure I won't go there unless you'd like to go there. I'd be delighted to answer any questions that you have. I realize that a lot of this was really technical, and I do my best to put it, kind of everyday language, but I've been accused of not doing a very good job of that. So if I was speaking Greek, I'm happy to try and put in plain language anything that I cover. Otherwise, I appreciate the opportunity to spend some time with you all.
I had a question.
Yes, sir.
Do people sometimes partially sell the business to like a bigger company that can grow it more than they can grow it on their own if it had potential?
So you do sometimes see that. Big companies. In fact, every one of the big technology companies, Facebook, Google, Amazon, and even companies like Kellogg, the food company, have all set up venture arms, which will make investments into innovative companies in their respective, and markets they desire to go into. So, it's very common to see big companies use their venture capital affiliates to really to invest in companies. Think of that as outsourced research and development in a lot of respects. You do on occasion see companies buy minority stakes, into smaller companies in businesses where they operate. The problem generally with bigger companies making investments into smaller companies is then for those owners of that smaller company, you've really now aligned yourself with that one larger company. And if you ultimately wanted to go sell 100% of the company, you may have eliminated all the competitors of that bigger company as buyers. So that's one of the downsides that you see in those cases.
Does anyone else have a question?
I think I muted myself.
We can hear you.
I can't figure out how to get back on.
You're on.
Looking for her mute button for years.
You're on, Linda. Oh,
Okay. But I just want to thank him for taking his time and everything to be our speaker. We really appreciate it.
Well, you're welcome, and I appreciate the opportunity.
I might get in touch with you. I have an interest in what you do. So
I'd be happy to follow up with you, and the contact info's up on the screen, or if I can make sure that I think we coordinated this with you, correct?
yes.
Yeah, I know we did. So you've got my email
Okay.
address. I'm speak with you afterwards.
Okay. Well, it's getting at 6:30. We usually finish on time, so I will close out the meeting with the thing. Oh, sorry. Let me thank you, Mike, for coming. We appreciate your presentation, and I'm going to close on time, or a minute late. We'll do the four-way test, and then we'll have Rick bring his glass. Okay, the four-way test are the things we think, say, and do. First, is it the truth? Second, is it fair to all concerned? Third, will it build goodwill and better friendships? And fourth, is it fair to all concerned? Thanks, everyone, and I'll be in touch with you, Mike. Okay, Rick, ring the bell. Thanks. Take care, everyone. See you next week.
Bye.